Hello and welcome to Trading Hour on CNBC TV 18. I'm Ekta Batra and my co-anchor Prashant Nair will be joining us very soon. Well, it is turning out to be a day where we managed to scale 11,000 and we're hovering around those levels. But you'd have to say that it is definitely just a couple of stocks which have really led the Nifty to levels of around 11,000. So if you just see the kind of gains that we've seen in specific stocks such as Infosys and Reliance Industries, Axis Bank, not today specifically, but I'm talking about a year-to-date kind of gain we have seen for these stocks, anywhere between 13 to even 17% But separately, a lot of stocks in focus in today's trading session. So TechM really powering ahead post numbers. We have Z Entertainment, which is up around 5% but the mid-cap index is still disconcerting. So the mid-cap index itself is down around 0.7%. We have a lot of the ADAG stocks which are under pressure. Reliance Infra reacting to numbers, that stock down 25%. Reliance Capital, Reliance Communication. Separately, Adani Enterprises, which is down around 5% at this point in time. A couple of other result reactions includes IDFC First Bank, that stock down close to around 5% recovered from the day's low. Vodafone Idea comes out with numbers today, that stock down around 3.5%. Jubilant stocks also in focus. Hi, Prashant.
Hi, Ekta. So, I mean, it's a market with stocks, right? I mean, a market with lots and lots of individual stocks and individual stories. And there is no broad, big narrative out there which can explain all of these moves. I mean, it is very idiosyncratic. And as Ekta pointed out, a bunch of names, I mean, groups of stocks or individual stocks, and each are kind of sort of following their own threads and stories. At this point in time, there is I think there's been a filing which is on Jubilant Food, which has come through on exchanges. There is a investor. Okay, this is just. I mean, I think it's a intimation about investor meeting on the 7th, which is tomorrow. But I think that is in the regular course of business. It's nothing to really pay attention to. Stocks down about 1 point. We'll discuss more on Jubilant Food in a bit. Let's get it going with Sudarshan Sukhani at this point, Vesto-Analytics.com. Sudarshan, morning. Thanks very much. Your sense on the market, what would you do, and, trades?
Yeah, good morning. Well, the markets have finally crossed that 10,985 hurdle. We've come to this point 4 times earlier and retreated by the end of the day. So today, it's quite possible that we may finally cross it and go into a new breakout mode. But it's too early to take a trade. We traders need to wait till the evening, till market close. If the Nifty is closing above 10,985, then going long is justified. So just have patience. The Nifty Bank is not an opportunity to buy because of the meeting tomorrow. There's no sense in anticipating what the markets will do after a critical news event. So it is the Nifty which may be a buying opportunity in the afternoon as we close. Stocks keep on offering opportunities. Infosys, Ekta just talked about it. Infosys is a buying opportunity, and I think apart from Tech Mahindra, there is traction in Infosys also. Siemens is a buy. Siemens has come down in a deep correction, found support at lower levels, and is now bouncing back. So we are having a classic buy on dips opportunity here. And finally, Ultratech is a short sell. That stock has been hammered badly. That continues. It's underperforming in all respects. So 2 buys, Infosys and Siemens, and Ultratech as a short sell, and Nifty, wait for evening.
Okay, all right, Sudarshan. Well, we have a couple of Twitter queries now. Bikram has 8,100 shares of PNB, which is at 105. He wants to know whether he should hold or sell. Numbers came out yesterday. First time that PNB, in fact, broke into the black after this whole Nirav Modi crisis. So what would you recommend?
I think he should get out. He should sell and get out. So nothing is going to happen to PSU banks. I think we all understand it. Switch to either ICICI Bank, to HDFC Bank, or to both. But get out of PNB.
Okay. All right, Sudarshan, we're going to let you go on that note. Thanks very much for joining in and bringing us all of that perspective on the technicals. We'll touch base with you later on. Well, it's turning out to be a session where there is definitely mid-cap underperformance. But like we mentioned at the start of the show, there are some stocks which are really powering ahead. And Tech Mahindra is one of the top Nifty gainers today. It's reacting to what is a stellar set of Q3 numbers which came out last evening. Reema's here with the highlights. Reema, over to you.
Yes, absolutely. Absolutely. It's an all-round beat by Tech Mahindra. So on the top line, the company's delivered a 4.3% constant currency growth. Growth is superior compared to what TCS, Infosys and Wipro delivered. Less than HCL, but HCL had an inorganic composition. In dollar terms, it was a growth of 3.5%, and the top line beat was led by lower than expected furloughs, ramp-up of large deals won in telecom, and recovery in the HCI revenues. Even on the margin front, the company managed to improve margins by 75 basis points to come in at 16.1%, and less than 2 years ago the margins were at 8.2%. So that is the journey covered by the company in terms of margin improvement. If you look at the internals, that's looking good. So telecom has clocked in a decent revenue for the second consecutive quarter, so up about 2.5% sequentially. The enterprise business, which was weak in the prior quarter, has bounced back 4.2%. Deal wins are quite strong, $440 million on a sequential basis. The only miss has come in on the attrition, which was quite high at 21%. Brokerages are happy. CLSA ups the target price to 810. Kotak says revenue growth momentum and 5G optionality are future catalysts. And plus, the valuations are quite reasonable. It's inexpensive at 13.5 times FY20 PE. Back to you.
Okay, thanks very much, Reema, for that. Let's move on to another story. This is Jubilant FoodWorks, which is in focus, and we all know the story by now. It's been quite a busy day and a busy morning, I guess, for investors in Jubilant FoodWorks. So we all know what has happened. We broke the story yesterday first that Jubilant FoodWorks is considering essentially giving a royalty to the promoters. It was confirmed around 6 o'clock in the evening with the exchange filing by Jubilant FoodWorks. Late at night, after 10 o'clock, the proposal was cancelled. Essentially, another exchange filing in the night informed us that the promoters have decided not to collect the royalty, which is 0.25% of the top line to be payable from the F520. The stock opened higher. I mean, remember, it was up, I think the high was about 1344 or so, which was about 5% gap up. And from there, it has slipped sharply. I think there are a couple of reasons for that slip. One, of course, is the fact that, although this move has now been cancelled and it's been reversed, the fact is that it was tried in the first place. Secondly, there are still concerns whether the promoters are going to try something new to take out cash from the company. I mean, it's that's what you hear from investors that you speak with. And third, there is also generally a concern as to, what is the debt situation at the promoter level? I mean, is the debt situation really bad? I mean, was it so bad that they had to try something like this? Remember, promoters hold about 45% Jubilant FoodWorks. Out of that, only 18% is pledged. So the situation is not exactly like it is with other groups, like, for example, Z, where a much larger percentage is pledged. If the debt situation is really bad at the promoter level, I mean, they could pledge 100% of their holding. What's pledged is only 18%. So there is a lot more room. So the situation is not similar to other groups. But the fact is, it is still a worry, given that we do not know what is the debt situation at the promoter level. So those are a couple of reasons why I think you're still seeing continued pressure on the Jubilant Food stock. Ekta.
Yes, absolutely. Jubilant Food, in fact, that stock down around 2.3%. Jubilant Industries has managed to recover, and Jubilant Life hadn't been, it didn't move much, Prashant, yesterday. So maybe we should pull up Jubilant Life in terms of a stock as well and see what the pharmaceutical stock is doing at this point. That too is down around 2% at this point. But that's on Jubilant stocks. We have a lot of these Anil Ambani stocks which are under pressure today, and Reliance Infrastructure is in fact down in over 20-odd percent, 25% now for that particular stock. Anisha joins in with a wrap on what the numbers look like. Anisha, over to you.
Well, yes, Reliance Infrastructure reported its numbers late last evening. Though on the first look, the numbers look all right, but the internal and the operational performance of the company continue to remain weak. For example, look at the core EPC business of the company. The revenue is flattish and even the EBIT performance is not really strong. What really saved the day for the company is the power business, but do remember they've already sold off a big chunk of the power business, and the profit from the discontinued operations actually went up because that came in at 250 crores versus 180 crores last year. The regulatory income is also what supported the bottom line, because that came in at 360 crores versus 156 crores. So it is the power business that did well, but the infra segment of the company continues to be weak. In fact, they took a one-time exceptional loss of around 860 crores as well. As far as the other metro business is concerned, the auditors continue their going concern on the metro business and say that there are some difficulties when it comes to this business. In fact, the entire group is coming under a lot of pressure. We know that the entire group is heavily leveraged and the pledge shares of the promoters are really high. The table should come up for you on the screen. Stocks like Reliance Communication have a debt of around 46,000 odd crores, and look at the pledge as a percentage of total shareholding when it comes to Reliance Power, as high as 63%, and the debt figure also 25,000 crores. So clearly this entire nervousness around the highly pledged and highly debt companies continue, and all the Ambani Group companies coming under a lot of pressure. Back to you.
Anisha, thanks very much for that. So those are the three names in focus. Look at Foodworks going. I mean, it's, I think, gone back almost to the day's lowest point, 1256. Yesterday, I think the low was about, it had actually gotten to almost 1200 kind of levels. Infrastructure down 25, Tech Mahindra up about 6.25%. There are a lot more individual stocks that we need to focus on, and we will continue to do that as we go along. We take a very quick break here.
No, Prashant, before that, I just wanted to point out, I think it was last year around Feb where there was a promoter sell down which took place in Jubilant Life. And I think that had raised a lot of concerns at that point in time also. I think it was worth around $75 million. And I remember in one of the conference calls, it was brought up as, you know, an issue which was asked by a couple of analysts. So that probably this also reminded concerns of what took place.
You know, Jubilant Life, I think, got listed in 2009. I remember in 2010, the stake was 60% plus. It stands at 45%. So across companies, I think, you know, there has been sell down, which has happened. So, yeah, I mean, that is absolutely true. We'll, of course, keep digging. We'll get you more, but we also have to take a very quick break here at this point. We come back. Manisha Gupta is going to be talking about what's happening in the oil markets. Mishwin Mahesh, oil expert, is going to be with us on the other side.